Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for September 5th, 2019, and we're talking about bull breakout or bull trap. That's what we're going to talk about today. We had a video last Tuesday where we talked about this overextended, or I guess specifically, is the risk off trade too far, too fast? And in that question, we were asking on the daily charts mainly, has this big rally, we'll kind of jump back to it really quickly, in gold and in treasuries, has it gone too far, too fast? Too much, too soon? And at least, well, you can't make a trend off of one session, but in today's events, yes, we had the deeper pullback in gold, was a 2% decline, 33 points, and then we had the similar, bonds don't move that much, but a pullback in the bond market, ZN, TLT, and the like. So we did get that pullback, and let's just cross-check quickly here about the bigger picture. So crude and the equity markets are what we call risk-on markets, or offensive or bullish markets, and they rallied today. The S&P was up roughly 1.10%, and the Russell was your biggest gainer. Second to the Nasdaq, was different earlier, 1.75 and 1.6. That was up over 1.2. And that is your bullish breakout, which we'll get to in a second. So crude burst to the upside with equities, but it stopped at the resistance high, unlike the equity market, which broke out. So that's a little bit of a caution signal, at least, given that the S&P did break resistance high, crude did not. Otherwise, bonds fell and gold fell in today's session. So now we're going to just follow this concept of, is this one and done, or is this the beginning of something bigger? That's going to be the conversation that we have into Friday's session, and a catalyst, which we don't know the future, at least not as of this video, is the jobs report. So we'll see what happens tomorrow in pre-market. That'll be at 1 hour before the market opens and an hour before dawn session in Friday. What's going to happen with the jobs report? And will that be a catalyst that sends us above 3,000? Or is this just a sneaky bull trap? Bull breakout got everybody along, or at least short squeezed out, and then back inside the range. We don't know. So as traders, all we can do is plan. So we can do that with multiple avenues or indicators or just logic. So we'll now focus on the S&P for the moment. Given that we are above this rectangle or the large 100-point volatility box, and we're comparing it over here to the end of 2018, which is a little bit of a wider 200-point volatility box, and that broke to the downside. And didn't really have an upside break, didn't really have any traps, just that was a straight break. Well, actually, you did have an initial break to the downside under 2,600. That pushed us back inside the box to 2,700. That's actually a 100-point range in 3 days. And then you had a 1, 2, 3, 4, 5, 6, 7, 8, 9 day to the downside fall. So this could be a similar, I'm not going to call it that, but if we see a poor jobs report on Friday and we see the index trickle down or turn in reverse, like it did in the end of the session, down against this 2,900, just shy of 3,000, well, I'd be watching this spot between the gaps, or the gap between the zones. And that would be a bear play or bear outcome beneath about 2,960, 2,965. So look for a downside play if that occurs. If you ever get back under 2,935, 2,940, that could be a little trap scenario. That would lock in a bull trap. And that could send the market much lower over the next week or 2 weeks. So we're watching that to be a trap scenario. We note that volume, or bull volume, wasn't really that strong today. Nevertheless, here we are. We can't argue with the price. The price is at new highs and is not that far from all-time highs. If instead we have a good jobs report or other news comes out, China or whatever news you might get tomorrow, then if the market gets above 3,000, the thought process is that we short squeeze or resume the bull market trend, because this still is a bull market, maybe a transitory or transition market, but still higher highs, higher lows, higher highs, higher lows. And we've had little interim pullbacks, but on the weekly chart, it's still a bull market for now. To get in that bear zone, you would need it under the 200-day moving average and ultimately 2750 to make a lower low. So we'll cross that bridge once we get there with our positions. And this, of course, translates into individual stock positions, which include all these here. Let's first talk about Amazon before we start talking scans. So Amazon is a large tech name that is doing a bounce, finally. Took a little bit of a deeper pullback than expected, but it held, for now, the 200-day simple moving average. And that's at the 1750 per share target. So the most recent trade was a sell swing away from 2000 down toward 1770. And the most recent bull trade, or bull recommended trade, is a bounce play off of roughly 1760, which is a moving average and just a little bit under, a little bit too close for comfort there, of this rising parallel trend line. That could be considered a bear trap. Get everybody bared up under the break and bared up under the 200-day simple moving average at 1750, and then the market has other plans. So Amazon is on a buy at least until it gets toward 1900 or up to the prior highs. Other stocks would include Apple, which just completed a bull bounce off of 200, actually 202. We've been recommending that as well. So it is into a pivot point just shy of $215 per share, which is the prior high. The other high would be 220. If 215 breaks, we may see Apple up $5 more. So in this type of swing trade or bigger picture logic, we would use in-out spreads, short-term duration, or vertical spreads, calls or puts. Puts if you're bearish, calls if you're bullish. And that could have a little bit of a longer duration. And that may be best for weekly charts. But nonetheless, it's just level to level and price moving toward or away from. Other news today, it's not all super bullish, was Netflix. Actually, Netflix did turn the corner and close higher. So this is a potential bear trap. So Netflix did break a support pivot at about 290 per share, roughly 288. And today's session gapped it down and V-spike reversed it right back in that range. So I'd watch Netflix extremely closely, especially if you are playing a bullish position with a divergence or any other logic for a bounce play. So it's in that careful zone. That careful zone is roughly 280, see the pivot there, and 300. So watch that extremely closely into the future, even if you're not trading it. Google, just completed, almost completed, just about there, its range bounce. Now Google is and remains in a trading range. We've discussed this, and some trades have taken place between 1220 and 1025, or to be, I guess, precise, 1225 and then 1025, with the midpoint being about 1125. And we've had this bull play up toward this 1225 pivot. Just like the S&P, you're seeing chop, chop, chop in Google. So if you are trading back and forth or trading intraday or very, very short term, you have had high resistance and low support, or high shorts and then bull longs or low longs, similar to the S&P. Now, let's conclude the video with a little quick scan. These are, we've discussed this last week too, scanning for stocks in the S&P 500 that just made new 52-week highs, and in some of the cases, new all-time highs. And the way we do this is simply a new yearly high scan the S&P 500, and then I just add the sector. I also have a list here on the watch list that I can pull the charts up very quickly, and then we'll do that momentarily. But I'm concerned with or care about what sectors are showing up repeatedly. Last week it was utilities and staples. This week, you still have some of them, but you also have industrials. You have information technology. And real estate remains relatively strong, and that's in part maybe because of a low interest rate environment where interest rates are expected to keep falling. Nonetheless, information technology stocks would include, just a list, AT&T, Western Digital, Seagate, Visa, which we may think of as a financial, but still. We also have Western Union. And in financials, CME Group makes an appearance. And in industrials, Equifax. And in other stocks as well, Lockheed Martin. So just pulling these up, taking these into a scan, you can do new yearly highs. And I'll just quickly do a weekly chart. Twitter just made a new 52-week high on our daily chart, but a little bit shy of its opening or IPO price above 55 or at the 53 level. So it's not quite at an all-time high, but still strong. Western Digital is coming up off a V-spike low and just made not necessarily new all-time highs, but still. We look at Ross Stores, which is a department store. That's strong, getting stronger. That's a retail name or discount retail name. Just name a few. MasterCard, we certainly can look at it. That is a stellar chart. If you haven't seen MasterCard, symbol MA, weekly chart, higher highs, higher lows. We've discussed it a little bit there. This is a bear trap. And that's propelled it to all-time highs. And Dollar General, right there with Ross Stores. Target, which is something we may be really surprised and impressed to see at this high, is making new 52-week highs as well. And some of the others would include, I'm going to show names that we probably know about. Walmart. And I had a reversal down, but Walmart is up there, also kind of a discount chain. Lockheed Martin, which is LMT, defensive stock, or defense stock, as opposed to a defensive stock. And Professor Bierman likes to discuss Ball Corporation, which is BLL. And I've discussed it too, because it keeps getting stronger. This is into 2018, caught the bid. 2019 has been relentless. So that's where we are on the market overview. That's not a good sign, having it do a reversal candle, bearish engulfing, so I'll leave it with that. Capture your interest on Ball Corporation and other stocks making new 52-week highs. But the main question will be, as we go through the jobs report and into next week, 3,000, is this a trap? And we go back inside, or if we get above 3,000, we probably do see 30.50. As the bull market continues, like it, love it, or hate it. It's price, it's supply and demand, and as traders, we follow it. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for September 5th, 2019.